Jeff, kind of riddle us what usually is the pattern of growth and value stocks as an expansion plays out, and is what we're seeing normal or atypical?
So I think what we're seeing is normal. We saw value do really well off the bottom. You kind of had a rising tide lifting all boats scenario. But as soon as growth starts to slow down, investors start to look for growth wherever they can find it. So I think we're in a position, we just talked about this regarding the yield curve. The Fed is hiking in a very different environment than it did, say, between 2015 and 2018. PMIs during that period went from 47 to 60. So we had a rapidly accelerating economy. And I think you can make a pretty good argument that we have the opposite now. We're heading into a slowdown. So investors are going to be looking for companies that can maintain earnings growth really regardless of the cyclicality of the economy. So that's why I think there's opportunity in some of these growth names that have obviously lagged a lot this year. So you're entering at a better valuation.
Netflix. I don't know. Do we consider Meta, Facebook, a growth name? RH is an interesting one, down 40% year to date. Cyber stocks. Give us some examples.
Yeah, well, I'll start with Facebook just because it's sort of a stock everyone loves to hate. And I do think some of their choices, even recently, make me question some things with the company long term. But if you're talking about making money in 2022, I think Facebook is a really interesting stock. Like it's down 40%. You're trading at a below market PE. It's a company with really high margins. So this is the type of company that investors are going to be looking for as the economy starts to more noticeably slow down. I think that's evidenced by the fact that the stock held that 200 level. I think that's an important technical level. And recently, Facebook's outperformed the triple Qs by about 700 basis points. So I think you're starting to see investors look for companies like that, even though everybody loves to rail against Facebook.
Including one of our guests yesterday, by the way, actually, and also railing against Netflix as well. Do you think Facebook's earnings, and for that matter, Netflix's earnings, are not secure? That's not the right word, but are they going to be strong enough to justify the prices and translate into higher growth for the prices?
Yeah, we could take Netflix as an example. I think it's a good one. And everybody's wondering, can they produce content? Can they continue to grow? Reasonable questions. But number one, I think stability at these price levels is interesting. That's that pre-COVID high. So I don't think it's stalling here on the downside by coincidence. But then looking at the valuation relative to growth, you're talking about valuations back at 2008 levels. And yes, the forward-looking growth profile is different. But by no means do I think it's over. I think we're a long way from market saturation. The company is investing in content like it expects growth. You're still talking about 30% or so earnings growth in 2023. So again, from these price levels, I think you have a pretty good performer here.